Let's start off with the liquidity squeeze that we see in the banking sector. It seems that now the Reserve Bank has to step in and assist with extra liquidity to ensure that the banks are capitalized efficiently.
Yes. I think the situation has been like this for the past couple of months, and I think it worsened towards festive season when the cash demands associated with the festive demands peaked during December. I think from the regulators' point of view, I think they've stepped in. We have seen some initiatives. I think presently there are plans to resume the lend of last resort. I think the central bank is making efforts to put together about 100 million for the lend of last resort function. And tied to that, we have seen the Reserve Bank together with the Treasury trying to resuscitate the money markets, where they are planning to introduce some money market instruments into the economy. So I think those are some of the initiatives that I should sort of assist in terms of banks trying to be accommodated at the last window of last resort.
Okay, so James, I mean, just to reiterate, you mentioned that one of the reasons that we're seeing this liquidity squeeze is because of the cash demand increasing quite dramatically. Are you trying to say that deposits are coming under pressure? And also just give us an indication of what the credit scenario is like, because that also could create a liquidity squeeze if banks are lending too much.
Yes, definitely. I think in this market you find out that the lending to deposit ratio is quite high, close to 90%. And in such an instance, in some instances, we have banks that have even lending to deposit ratio of close to 95%. And if there is any sudden rise in demand for cash, you find out that the banks are faced with some kind of liquidity challenges. So that's kind of the scenario that we find ourselves in particularly for some smaller banks.
Yeah. So when do you expect the situation to rectify? And as you mentioned, the Reserve Bank stepping in as the lender of last resort. How effective is this going to be? And also these instruments that are going to be implemented, do you think it's going to fix the symptom as opposed to the actual cause of the problem?
Well, I think some of the measures would have to be sort of long-term measures, where we need as a country to correct the mismatch between our export and imports. But I think in the meantime, like you said, we expect the situation to improve significantly. As you know, our tobacco started, tobacco is now being sold at the auction floors. I think the auction floors opened up in mid-February. And normally tobacco would represent another injection into the economy. And we expect that more than 400 million of US dollars would be injected for this season through to tobacco sales, and that should to some extent help to ease the situation.
Well, give us an indication of the play between the likes of the corporate sector relative to the retail market as well, and obviously the corporate market, and ensuring that that is cash flush and that it is also well capitalized, also has to do very much with the health of the banks.
Sorry, yes. I think what is happening is there's a lot of, most of the corporates, yes, they've been able to access sort of some working capital facilities from the banks, although these have been sort of short-term. In most instances, our corporates would want sort of some medium to long-term facilities so that possibly they can now put this into good use. And given the tenure of the facilities, I think the banks, the corporates, they find themselves in difficult position.
So the capital adequacy ratio for banks at this point is 10%. Are we saying here that they're not actually well capitalized? Is this the issue?
Well, there could be. I think from the last monetary policy from the central bank, there were indications that about close to 5 banks then were not adequately capitalized. In this case, the minimum capital requirements for commercial banks is 12.5 million. So we had some other banks that were falling short that could not meet those demands. So I think those banks that were falling short have been making some tentative efforts in terms of trying to come up with concrete plans to meet the minimum capital requirements.
Let's also just touch on what we've been seeing from an impairments perspective. And you mentioned that it seems that credit demand is at a fair level. What about impairments? Are we starting to see a high default rate, or are things very stable in Zimbabwe at this point?
Yeah, well, I think a concrete position we will be able to know a concrete position in this March as banks begin to publish their results. But there are indications that I think tied to a rising loan book, credit is increasing. You are bound to see sort of some impairments increasing as well. So we are not yet sure exactly to the exact level, but yes, it's given that the credit has been rising rapidly, the impairments are bound to rise as well in tandem with that.
James, also perhaps shed some light, and given the fact that the central bank is going to be pumping money into the banks at this point, obviously it's going to be in dollars, I would assume. So therefore, it wouldn't actually be an increase in money supply. Is that the right assumption to take?
Well, I think there will be an increase in money supply, but some of this money, some of it is more like it will increase a lot of interbank trading among the players. And I think as well, in some instances, it gives leverage for banks to be able to lend some of the money to the other players. So to some extent, obviously, it should have some positive impact on money supply. But in this case, when our money supply increases to some extent, I think it's linked to our deposit growth.